Welcome to Oregon Cash Flow Pro. We have a great question that we're going to be addressing today. As you know, I'm always here to help you maximize your cash flow. And if you've spent any time watching this channel, you'll also know that I'm not a hater on a lot of the products out there and different investment options that we have. I think that there's a place for all of these things potentially in a portfolio. So let's get to the question. This is Corinne asks, James, would you be willing to consider making a video side-by-side comparison of 401k contributions versus IUL and whole life? I'm maxing out $22,500 each year in the 401k. What if that can be stopped? I'm paying attention to employer contribution portion, and all of that money for 5 years goes to IUL and whole life. My logic tells me in the long run, the 401k will cost her more because of taxes. Okay, this is a great question. I don't think that I'm going to do a side-by-side comparison of the 401k compared to the IUL and the whole life. And the reason is they serve different purposes. You don't necessarily want to be thinking about one or the other. And most of the time, there can be some circumstances where somebody doesn't have enough money to contribute to both. In that scenario, I would suggest we still don't do a comparison because they're serving different purposes. Your money has to serve different purposes. If you don't have enough to contribute to both, do you have an emergency fund? You should have an emergency fund, and it should be substantial, because if you start contributing only to your retirement account and you don't have extra funds outside of that could potentially serve as an emergency fund or fund a life insurance policy, you're locking those dollars up until retirement unless you pay a penalty to get those out and get at them. And when you do have to get them out to get at them, you're also going to pay taxes at that time. So we're looking at using these things for different reasons. Why do we contribute to a retirement account? We contribute to a retirement account in order to get tax deduction right now, in order to get an employer match, potentially, and exposure to the stock market. Well, we don't have to be inside of a retirement account to get exposure to the stock market, but it's a great place to start getting exposure to a stock market because of the other benefits that come along with it. Why do we contribute to an IUL or whole life? We contribute to those for the tax advantages, but it's after tax dollars. So it's the tax advantages in the future. It's the tax deferred growth, the death benefit, the downside protection, the guaranteed growth or the growth potential that goes along with that downside protection. And it's such a great place to safely store our money when we're not investing it in something else. And so we'll use our cash value from our policies at some point throughout our life. We can use that to meet emergency fund needs. So it's a good place to store our emergency fund. We can use it to go invest in other cash flowing assets. And as those cash flowing assets pay back, we pay back any loans from our policies. Maybe we can always withdraw from those as well if we didn't want to take a loan. But as you probably know by now, we take loans against these policies so that we don't interrupt the compounding growth that's happening inside these. We just use them like a line of credit. We use that cash value like a line of credit. So there's different purposes that we're going to use these things for. Ideally, we're going to do both. So let's say you're in the 24% tax bracket. If you can put $22,500 into your 401k and you get to deduct 24% of that, that's an immediate tax savings of $5,400. What could you do with that extra $5,400 as opposed to giving it to the government as taxes? You could put that into a life insurance policy. So we can kind of use that to do both by having those savings. You're going to have an extra $5,400. Now, that $5,400 is actually part of what's going into your 401k. So that might not necessarily be $5,400 in tax savings that you can put into the IUL or the whole life, but you get my point. We get an immediate tax savings. There's a benefit to that. You might get an employer match up to a certain percent. Maybe you get another $5,000 from your employer by putting that money in there. That's great. Well, putting the $22,500 into your 401k, the funds inside your 401k probably do have expenses, but the tax savings should help to offset any of that. And there almost isn't any investment out there that's not going to cost you some money as you own it. If you're in an ETF or a mutual fund, those all have costs inside of it, even outside of a 401k. They're oftentimes a little higher inside of a 401k, but these days, hopefully they're not too outrageous. In life insurance policies, we have the cost of life insurance. We have the expenses that have to be there to recoup what they pay out in commissions. And then we've got the actual insurance that we've got to pay for. So there's those expenses. In real estate, we got to pay property taxes. We've got maintenance. There's not an investment out there that doesn't have expenses. So when you're thinking of what is going to cost you more as to be the deciding factor of where to put in there, I think it's the wrong place to start from. What I would like to do is figure out how much should I be putting in each of these products to help meet my financial goals. And we should be diversified across these products. We don't want to get to retirement and have everything at risk in the market. We don't want to, on the way to retirement, have everything in our retirement accounts and no access to cash outside of it in case of emergencies or other opportunities that come about. So what ends up being the right ratio is going to be very personal. And this is where we can have a conversation. I can help you figure these things out. But ultimately, you're going to have to decide what's comfortable for you. What I like to say is, what's your sleep number? What diversification allows you to sleep at night? If you put everything into Bitcoin, that might be pretty hard to sleep at night because of how volatile it is. Doesn't mean it can't pay off. It doesn't mean it can't be a good investment. It might be, but it might not be. It's extremely volatile. People can blow up their accounts by trying to trade cryptocurrencies, right? Those things happen. So we're not going to take all of our money, all of the money we have allocated to investments and put it in one investment like that. We've got to diversify. So what's your sleep number? How much goes into the safe options like IUL and whole life, which provide us a bunch of other benefits? Ultimately, that's going to be up to you to decide. Hopefully that helps to answer that question in a way that makes sense and helps you solve the financial problem that you're trying to reach. That's what we're here for. My number one goal with this channel is to help you guys solve your financial problems. Most of the time, it's with maximizing our cash flow and doing properly designed life insurance policies, high cash value policies that can supplement all of our other efforts in retirement and investing. So if you have a question, schedule a meeting with me. The link is in the description below where you can schedule a meeting with me via Zoom. I'm happy to talk with you and help you solve your financial problems. And if you found value, hit that like button, subscribe to the channel, and definitely leave questions in the comment section. I still answer every single one. And if it's relevant, I just might put it on video like we did this one. Hope you found value in today's video. If you'd like to find out more about IUL and whole life, check out these videos right over here, and we'll see you next time. Now go maximize your cash flow.